Great, thank you, Aditya. So today I'm going to be talking about family offices globally and what I see changing in the industry, how I see single family offices are managed right now, and how that applies here today for you as professionals. I think one of the most important parts to make before I get started on the slides is just listening to Aditya and running this event for 4 years, that I don't think there's a better investment of time if you're here as a service provider or someone to grow your client base than to focus on understanding family offices, because one client that is a single family office could be worth 20 clients that are maybe worth $5 million each. And while there might be a lot of complexity within these families' portfolios, at the end of the day, you have less relationships to manage and you can do a better job at delivering value to them. So I just want to thank you for having me here, and the importance of getting on top of this curve of family offices growing in India, because those that understand it best, whether you're inside a family office or external, will be able to take advantage of the expansion of the market and have a better co-investment network, better access to deal flow, counterparties, or clients. So there's a slide up here. I'm not sure if you can read it from where you're sitting, but it shows the number of millionaires globally. It shows that there's over 9,000 in Asia and India that are worth over $100 million. But as everyone here knows, many people in Asian countries don't want anybody to know if they're worth over $100 million. So these statistics are horribly off base, but it just shows the massive opportunity that is around right now, as wealth is created in Asia faster than anywhere else in the world, and that you can bet that the statistics in Asia are far understated versus North America. I think it leads to an exciting picture. One thing I want to touch on here on this slide and the next on centimillionaires and billionaires is just that at the end of the day, these are business people. All of our clients, out of the 14 clients, 13 out of 14 are first generation families who have all created their wealth through control of real estate assets or operating businesses. And I think that what sometimes people forget when they've kind of grown up in the asset management world or in the banking world is that these are business families before they are wealth management clients. In their brain and every day running their operating businesses, they're looking for good business deals and good value for their money and good credible teams that they can trust in to work with. And I think that that's often forgotten, and I see it in people that we work with and people that pitch deals to us, is that they try to appeal within the fund management scheme of, here's our fees, here's the structure, et cetera, and they're closed off, they're closed-minded to a business way of working together with the family, whether that be instead of selling them an investment fund, you could work with them on a joint venture project or a direct deal or an independent sponsor basis, or maybe just to get to know the family, you work with them in some business way or introduce them to 3 other families that work in the same industry, like 3 other manufacturing families or 3 other oil and gas families that might cost you nothing to do, but that really might be valued by them as a business person. And I see that as the most important part of this slide. I want to make sure we can get through all the content here. With billionaires, I see the same thing, but what's interesting is now billionaires control over $7 trillion of capital, which is just under the size of the GDP of all of China. And as a number of billionaires increase and the size of each billionaire's holdings increase, they're a force to be focused on. I think that even in the United States, where the family office industry is most matured, except for maybe in London, I just find that a lot of people who are focusing on family offices don't focus on serving billionaires, and they don't cater to them, and they don't cater to the unique needs of them. I really think that if somebody is worth $40 million, their needs are a lot different than somebody worth $400 million, and their needs are a lot different than somebody worth $4 billion or $10 billion. And while that might sound obvious, I just think as the family office industry expands, the iterations of it growing in competition, there's always going to be this opportunity to serve the $100 million plus, the $1 billion plus levels. And right now in India, we just heard that there's maybe 100 family offices that are trackable in the database that Aditya is building up. But even 10 years from now, I think as the industry becomes more competitive, there'll still be very few people that say, we serve billionaires, we focus on serving them, we have a department or a person that focuses on them, because it takes courage to say that's who we're trying to attract more than the other groups. And I think it's cool to see that opportunity is there for the seizing for people here in India that are looking to add value to families, because it can be done in a way where it does add genuine value. It's not just a marketing ploy. We're doing this with a few families. We have 2 families we're engaged with currently, and then we're also working with 2 new families. One's real estate, and one's a diversified family with a 1,000-year history behind them. And essentially, with one, for example, we are basically helping them with a wine business that they have. It's a 600-year-old vineyard. We're helping them on getting their wine imported into the United States. It's just a bunch of legal paperwork, regulatory work that my team can take care of. We're doing them a favor, introducing them to some wine families that can help move some of the wine from their vineyard, and becoming business friends with them to do other work with this billionaire family. And I think it's just an example of what you can do here in India business-wise to gain clientele or to work with other families if you're here as a single family office. I'm going to go over in a couple slides here the different types of family offices that are out there. And the reason I wanted to do that is that lots of times you'll hear people say within the media or at events in Europe and the US that every family is different and you have to approach it as a unique thing. And I think that's really harmful to say. I think that part of our role is to identify what are the common threads, what are the best practices, what are the different models you can emulate. And if you looked at the types of animals that live, in the forest or the jungle here in this part of India, you can classify them based on genus and species, and you can say this type of animal typically behaves like this, or their DNA is like this. And I think that in the family office space, as the industry matures and grows, there'll be these different classifications and types of family offices, so that a single family office that's based here Mumbai that has $300 million in assets under management can relate to others and draw best practices from them. And I think that's really important as an industry, because otherwise we're basically telling people who show up to an event like this looking to figure out what to do with their family's portfolio, oh, well, good luck, because you're going to need something completely custom and you're going to have to pay someone to start from scratch and figuring out what to do. And I think that's for sure not the case. So I would just encourage those that are running a family office here today to look for these best practices and connect with your peers and be a little bit more open with maybe 5 or 10 family offices you can get to know really well, so you can share these best practices. The number one thing that's growing the family office industry today that I've seen is the desire for control by families that are worth $100 million or $1 billion or more. And what we've seen is that because a lot of the families that need a family office are first generation wealth, that consistency, that need of control is just carried on from the natural evolution. It's in their DNA. So it seems really backwards to them to earn all of their capital, earn all of their wealth, and then as soon as they get it, say, well, let's give this to someone else to manage. I hope they do a good job. And I think that a family office's job, whether it's a multifamily office or a single family office, is to be more holistic, to have excellent communication and a 360-degree protection holistically of the family's portfolio. And that's really at the root of what a family office is in the first place. And I think that is really what differentiates, a private bank offering versus the family office, is that holistic view. Looks like the slide's not switching maybe, but we can keep on going. So basically, I think that one of the most important points I wanted to make here today was the different types of family offices. And one type that I wanted to get out of the way first is what I'd like to call, a fake, family office. Like if you go to family office events in the United States or in Europe where it's a more popular concept, you can end up wasting time sometimes meeting with people that say, oh yeah, we run a family office, and you find out it's a private banker who's just between jobs, or you find out it's a multifamily office and their average client has $5 million in assets, and they had one client that has 50 million, but now they call themselves a multifamily office. And sometimes it's with good intent. They're just trying to move their business upstream and deal with more high value families. But you have to be careful if you're here as a service provider or a fund manager today, just not to waste too much time with an unqualified family office. Maybe it'll be a good long-term relationship, but you can burn a lot of time if you're not careful. The next type is kind of a holding company family office. And this is the most traditional one. I think it's most common in India right now. And it's basically someone learns about the family office concept and they say, oh, we kind of have one of these in place. And they have maybe a foundation or a philanthropic part of what they do. They maybe have a CPA or an accountant that is really well trusted by the family, and they have their different operating businesses and maybe a head of those businesses, but it's not formalized as a family office. And the black and white difference is that if you have a family office, especially a single family office in this example, then you should have somebody who's in charge of all of those moving parts, from philanthropy to budgeting to next generation, governance, ethics, managing the family charter document, managing the family's image, and trust and estate type issues. And you should have a 10 to 20 or 40 page family charter that basically documents your family's governance and ethics and mission and values and objectives. And if you don't have that, then you just really have a holding company and you have some different disparate parts that are maybe not working together in concert. So the whole idea is to have more integrity as a family in the sense of everything being orchestrated and in line. There's also a big trend right now in the United States for creating what's called a virtual family office. And what's happened is that as there's over 20,000 family offices globally now, a lot of people hear about the concept and they say, well, I worked at Facebook early on and I'm worth $50 million, but I really like this concept of having my own single family office and I can't afford to have 12 people on staff. So what they do is try to take the concept of having a charter document, a holistic protection of their balance sheet, and they'll have 1 or 2 full-time people and then outsource everything else. They'll outsource a head of direct investments, they'll outsource due diligence and financial modeling, trust and estate planning, etc. And they try to get the benefits of a family office while keeping everything very lean and using outsourced service providers for everything. And I think that as India matures as a family office marketplace, that term is going to get used more and more here in India, and I think that's something to watch for or to cater to if you're a service provider here today. An endowment family office is another type. This is typically a second, third, fourth generation family where the creators of the wealth have passed away, and now the people running the family office are stewards for a very broad mix of family relatives that all have different needs. It could be even that they're only managing part of the wealth for the family, and the rest might be managed in pockets based on the individual family's preferences. But the endowment family office is basically just a very traditional, fully diversified allocation where basically you are not taking a big bet on any one sector or on real estate, and you're taking a diversified approach with a capital preservation mentality that's very conservative and institutional. A real estate family office is very common type. Here in the room, I'm sure there are family offices that have 50%, 80% of their wealth allocated to real estate. And I think this naturally happens in places like Hong Kong and Singapore that have big run-ups in value. The families are comfortable with it as an asset to diversify their holdings. And as their business holdings increase, those often include real estate assets. And some families are just fine doing this for generations to come. They don't see it as too risky. This is their strategy as a family office. And this is where if you get 4 families together that are all worth $300 million and they're all focused on real estate, there are a lot of similarities. Maybe one's focused on warehousing and one's focused on office space in Manhattan or New Delhi. But this is where you can take a lot of best practices. For example, lots of real estate family offices have portfolio holdings, operating businesses, which give them superior investment returns. They'll have a real estate brokerage shop, a real estate property management shop, real estate appraisal shop, and they'll have a full portfolio. Like one billionaire client of ours has 35 different operating entities in the real estate space. So you can imagine if he's brokering a lot of office space in Manhattan, and he wants to be investing his family's money in the space, he's going to know when the market is getting soft. He's going to know if he's paying a fair price. He's going to know whether that appraisal is accurate by a competing real estate appraisal firm. And he's going to be able to pick and cherry pick the best deals for his own family by having those operating entities in place, rather than saying, oh, we're just a family office. All we do is invest. Let's stay at arm's length and not get our hands dirty with operating businesses. We're above that because we're a family office. I see some of the smartest families getting very much in the businesses that they're trying to invest in and working in those industries. And that's a best practice I think other families can emulate, and you can take across to different industries. Next is a platform family office. There is a family office that has spoken at some of our events in the United States that when I spoke with them one year, they had 55 holdings, and the next year it was over 65, and they've never sold a business, but they've acquired 65 businesses that are all in one industry and a couple of related industries to it, and then they have an allocation to real estate. And the point of bringing this up is that a lot of family offices now are stealing talent from private equity funds, and they're basically saying, let's create a platform business just like a private equity fund would, and we're just going to create one platform and build on that for a generation or two. And private equity funds can't do that. They're looking to build, sell in 7 to 11 years, and institutions are patient, and they're usually going through a fund to get their co-investment activity. So really there's not a lot of competition out there in the marketplace that can take that long of a view on an investment sector as a family office can. And that's a competitive advantage because you're judging yourself on a different metric, and you're willing to do things that can take a long time to play out. Then there's a private equity family office. This is different than a platform family office, and then it's not focused on one strategy. It's diversified across 3 or 4. You might have a healthcare focus, manufacturing, consumer products, and real estate, and you can have different teams. It's almost like running 4 different private equity fund strategies within one single family office. And this is a lot different than having an endowment style family office. And the point of bringing all these up is I just see that a lot of the literature out there in family offices talks about it like it's one thing, or this is what family offices are doing, or like doing a benchmark study. It's very challenging, especially in a growing industry, and it'll be excellent to look at the results of it. And our biggest challenge has been, when you look at it, once you narrow it down to only the billionaire families or only the multifamily offices, et cetera, then the data gets thin because the market is so small. But the more that you can hold this type of a conference and do that type of benchmark study, it'll spread the idea within India, and it'll grow the whole industry, and it'll be better for everybody here in the room, I believe, as the space grows. I've got a few case studies here I wanted to go through, and I'm happy to make the slides available since I'm going through them relatively quickly. But what I find is that most people globally have never heard the word family office before. Even, I would say, most people that work in finance don't really know what a family office is. In the United States even, I'll run into people in the wealth management industry who live in New York and they don't know what the family office concept is. So you can imagine that the textile manufacturing business owner in India on average has never heard the word, and that most of your clients or potential clients still have no idea what a family office is. So if you can be part of that education on what it is, sharing best practices, connecting someone with other family offices or other centimillionaire, billionaire families, then you can build goodwill and build real value. And just knowing that the other party is going to get lost if you move too quickly into the benefits of a family office, I think is good to know. And just knowing if you're looking to grow your family office client base, you have to look out for those families that inevitably will need a family office because they just took their company public, they're about to sell their company, they are the CEO of a publicly traded company or the head of a big private equity fund here. Those are identifiable prospects that eventually will need one, and if you can help orchestrate them having their family office and you add that value, then you might earn a seat at the table based on that value you deliver to the family. And that's pretty much what some of these examples talk about. We have one family that came to us because they weren't looking at any operating businesses to invest in, only real estate, and they wanted to allocate 20% to real estate. So we're working on getting them access to unbrokered deal flow, meaning getting them access to CEOs of operating businesses so we can negotiate without having to look at a bank syndicated deal or a deal that's being shown to 50 other investors. We like to reach out to CEOs of companies that say, hey, yeah, I wasn't really looking to sell part of my company or all of it, but since you guys are only focused on my area and you could add strategic value, I'm willing to sit down and have a conversation, and we develop the deal flow that way. So we do this through positioning and reaching out to about 10 private companies a day. We position within the industry with branding and with media and with our email list and websites and events, et cetera. but then reaching out 10 times a day to very small strike zone defined private business owners, we found is an excellent way to source deals for the family offices we serve. Now the text is kind of small on this slide, but it basically just runs through some of the critical things that you should have if you're running a single family office, and how you can basically design a compass for the family. How do you decide if you should hire the son to do the investment banking for the family? Or how do you decide if the son should be allowed to hire his roommate for college? Because if that roommate does a bad job, is the sister going to feel like her money was wasted because the son's friend was given this cush job that he wasn't qualified for? And a lot of the family charter document is just really defining the DNA of the family and where they came from, as I mentioned earlier, so that every decision you make can be held up against this and say, no, why would we do this investment in this new software app for $1 million when the family's history and DNA is on investing in things and manufacturing, or investing in things that are already profitable, not investing in things which are losing money every month. Another thing that I think has to come with the maturity of the family office industry, but is nowhere near there yet, is systematizing a family office. What I see is that a lot of family offices have the hierarchy of a CEO and a CIO and analysts, but that their due diligence is somewhat ad hoc, and that they get overloaded. Even if they're a $4 billion family, they get overloaded and they feel like they're under-resourced. And I think what would really help small family offices as well as large is to come up with systematic processes and operational checklists, so that when you do due diligence, you're always going through these 30 steps. Or when you hire somebody new, it has to go through these 7 steps before you offer them a position. Or as you add on a bolt-on acquisition for your platform strategy, that you have to follow certain criteria, otherwise it gets screened out and you don't even look at it. And this can relieve a lot of stress of feeling overwhelmed. For example, last Tuesday, we got over 1,000 emails in a single day, and there's probably 200 different deals to look at. And that would be very overwhelming if we didn't know the strike zones of our family and could immediately eliminate probably 195 of those 200 deals and just say, for us, not a good fit, no thank you, we're looking for this, and provide market feedback to those people on what our strike zone is. So by having your compass defined, it makes the family more comfortable. I think it produces better investment returns based on the actual intent of the family and the goals and DNA and strengths of the family. But then also, if you systematize that, it ensures through measured key performance indicators and checklists that things are actually being done right consistently and professionally. And I think it de-risks a lot of the operational aspects that people don't talk about as much, because most of us come from an investment background, and that's a more exciting thing to talk about. But if you don't carry out the operations, then you can't delegate very well, and you always have to micromanage. So to actually do the more high-level value, you have to really be systematic about who's running the family office with you. I just have a few more slides here. This one is showing the cereal aisle in the United States. I should have updated this with a picture from the grocery store I was at last night. But if you look at the chocolate candy bar aisle here, be similar, is that there are hundreds of brands, and 100 years ago there was really only 2 options in the United States. It was grits or oatmeal, and then you had the Kellogg's brothers, who were kind of the first to kind of move into the cereal business. And my point is that right now we're hearing there's only 100 trackable family offices that's been able to be found over the last 4 or 5 years, and that we're basically at 100 years ago in the cereal aisle in the United States, where if you're running a multifamily office, or you are a service provider trying to add value, or a fund manager here trying to raise capital, you don't have maybe a lot of competition that's informed about family offices and speaking to them and engaging them and talking to them using their lingo and talking about their real concerns. But in the future, there's going to be 10 times the competition. There'll be 500 multifamily offices in India. So I think you always need to be thinking ahead to how are you going to stand out and be different, and how are you going to both appear to deliver value and also deliver value that's specific to family offices and not just generic to anybody who has $100,000 or $500,000. I think your branding, the clothes you wear, the people you hire, where your office space is based, the strategies you execute, the advice you recommend, all of that has to be aligned with serving them in a unique way, because otherwise when the family office industry here in India gets to look like this, and there are 400 options, like literally from here to the back of the room, you could fill it with the cereal options in the United States. When the family office industry gets that way, just be lost in the noise. And you might have your personal network and grow business based on referrals, but whether you're raising capital or growing your multifamily office, I think this is a really important thing to keep in mind, that you have to become specialized or you'll get lost. And from an investment perspective, for the single family offices here, the way to apply this to yourself is that there's more capital right now chasing opportunities than ever before. Companies are getting offers from multiple private equity funds and private investors if it's known that they're willing to sell and they're doing, say, $10 million US in profit a year, for example. And so I think as the family office industry grows, it just means there's going to be more capital on the table for companies to go after, and you're going to have to fight for good quality deal flow. And so developing what you're going to be known for to operating business CEOs and real estate asset holders is really important. And you need to know what your unique capital proposition is. Is your proposition that because you made your money in oil and gas and you have all the oil and gas servicing equipment as part of one of your operating businesses, that when you invest in an oil well project, you can give them 20% below market rates and improve the profitability of that investment project? And that's why they should give you the better valuation or take your capital instead of somebody else's? Or, what is your strategy and how does that align with your family compass and your family's history of investing? And I think this is important because single family offices don't talk about it a lot right now. I think a lot of them are just formalizing, getting their shop in order, but this goes with the trend of direct investments. And as there's more family offices, because people want control, there's going to be more direct investment activity for that exact same reason. And as those two things inevitably grow, then family offices will have to focus on what makes us unique. How can we be taken credibly as a family office to these counterparties? As I mentioned earlier, operating in the industry that you're investing in, I think is critical. Obviously, this happens over time as you close investments on operating businesses, but doing so strategically so that you have a chessboard in front of you that you can move assets around and get access to things, I think is really important. And if there's ways to use those assets to secure unfair advantages, then that is obviously something that a lot of the family clients I work with are trying to do. And that's one of the things that keeps my job interesting, is seeing how my 46-year-old client who's worth $300 million is using his portfolio to get access to more deal flow or get access to other families. And I think that when you look at any industry, you can identify choke points where if you owned that asset, that you would have superior name recognition or get to see deals first or get a better valuation on deals. So I think, again, this applies to single family offices very much in the room. And the more that you think it might not apply, probably the more beneficial it would be to use this, because anyone in here who's running a service provider company or a fund management company is going to want to use this strategy, obviously. But the more that other people are not, the more advantage you'll have in the marketplace. And I just have, I think, 2 minutes left here, so I'm going to wrap up these last couple slides. This one is just showing that to get a deal closed, there's probably 100 different variables that have to go right. But if you're not paying attention to these 7 here that I think are most critical, like where the deal is based, the credibility, the multiple, the valuation on the deal, the size of the deal, the industry, et cetera, then there's no way to get the deal closed. And I think a lot of people who try to raise capital from family offices ignore geography, and they might ignore, we'll go to family offices of all types, when they could just be going to manufacturing families if you're doing a manufacturing deal. And it seems obvious once you say it, but I just see this mistake over and over again in the family office capital raising space. I've the top 3 trends written out here, and again, you can get access to the PowerPoint, so I don't want to read it off to you, but basically, as the Indian family office industry expands, there's going to be a greater need and desire for family offices, both single and multi, to do more public positioning, to do more public relations, and to get in the public eye more, to get access to deals and joint venture partners. And there's going to be more virtual family offices. People that are worth $50 million are going to want the benefits of being a single family office. And my last slide here is talking about a book called 0 to 1 that was written by Peter Thiel. And it's an excellent book, and I think that the most important point in the book was that if you want to predict the future, you have to look at things which you know are certain and are going to become true, but the general public hasn't acknowledged them, and they maybe don't think they're going to become true, but you know in your gut they are based on your experience. And I know for sure the family office industry is going to be huge here in India, and it's not a wild prediction to say that, but now interpreting that to how that affects your single family office, your multifamily office, your service provider, offering, or your fund management shop, I think is the next iteration on trying to apply how are you going to specialize and how are you going to play in this larger game of the family office ecosystem to get great deals done with families, coordinate with the other family offices as the industry grows, et cetera. So I just find it, as a business person, many of us might have ideas, and we're maybe here in the room today to counter-check those against people or see if you're on trend, or how do we crack the family office problem and get in there and grow our client base. And the more that you can find something that you're really certain on and just take a bet on that as the family office industry grows, I think the better. So my contact details are here up on the slide. Our offices are actually based on the island of Key Biscayne. We're just about 10 minutes from downtown Miami, though. We've got 9 professionals there, and then we have offices in a couple other cities. But if you find yourself in Miami or in New York, where we spend a lot of time, let me know, and I'd be happy to show you our offices and introduce you to our team. And I think that's it, but I have time for just one or two quick questions, if anyone has one.
Am I audible? Hi, this is Umakant. I just actually, as we speak, we are actually setting up a venture fund which is focused on AI, machine learning, and Internet of Things, called Pi Ventures. And while we are getting, so we basically, just passed our first close, and we just wrapping up the paperwork, and we got good support from institutions, right? But one of my partners is actually traveling to US, and one of the things that we really want to understand and work with is family offices. So are there any strategies for help in that direction? Because one of the reasons we are quite bullish on family offices is one of the reasons that you told that they could actually give you leverage and engagement and network in certain geographies.
Right. Yeah, I think my advice for that would be to focus on families here in India first most, that you can meet with the most often, who have made their money in high tech. Either you can identify them because they have a family office, or more likely you could find shareholders of publicly traded companies or very well-known private companies that maybe get a lot of deal flow that isn't relevant to their DNA, and they're going to understand your story because they're in the high tech space. And I think you could hire somebody inexpensively to build you a database of 100 of those people. And then also, based on my experience in the US, a lot of people just aren't aware of what's going on in Southeast Asia or Singapore or India. So if I was to invest time in the US raising capital for a venture capital fund, I would again at just 2 to 4 cities and find maybe Indian descent shareholders of companies that went public, and people that already, they don't need to move up the learning curve. Because like when I showed on the Venn diagram slide here, it's just a very painful existence to try to teach them what is Internet of Things, what is venture capital, what is the opportunity in India. It's exhausting, and then nobody invests. So I think that all these things have to line up in my experience, because even then, you might have to go to 500 people to get the 15 investors, even with all these things aligned. So that's what I would do.
Yeah, thanks.
Sure. You have one more question?
Hi Richard.
Hello.
I'm Praveen from Evoke India Foundation. We run a financial education and financial awareness outfit based out of North India. So it's been an excellent presentation. I think we learned a lot in terms of family office. As you were saying that the awareness about this concept is very limited in US, and India, of course, it's very limited. So what do you think, what endeavors can be done, and of course with your presence also, to spread this and to, I think, make people, now we know that India is, in terms of wealthiest people, India is 7th ranked globally. So that wealth is rising. Now how we can spread this to more people. So something.
Right. I wasn't sure if that's you that I connected with on LinkedIn who shared that data point with me last week, but yeah, I did see that. And I think that you can copy, well, first of all, you can support Aditya in growing this event and growing everything that he's doing, because that is a big way of spreading the word, because nobody comes here today without talking to your business partner, your spouse perhaps, other people on your team. So for every person here in the room, there's another 2 to 5 people that now are more aware of the concept. So I think that's really important, and that's how you really grow at grassroots. But I think, I met with Aditya. He came to Key Biscayne, Florida, and we spent a whole, day together at our offices talking about this very issue. And I think it's a combination of having, thought leadership and best practices and public relations being done by family offices and working with the media. Because until you get the family office message into the major newspapers, social media outlets, and where there are millions of eyeballs every day, then it's never really going to be more broadly known. And no matter what we do, it's going to take 5, 7, 10, 12 years before it becomes, I think, a big trend. But those who are pushing it forward will be rewarded, I think. And we've seen this with our own business. Because of us pushing the thought leadership, we have families that ask us to do things for them that we didn't set up to do, but we're able to easily add value to them, and just opportunities arise, from helping push that forward.
So do you spend some time in India and can contribute towards some of these initiatives and